Are we in a bubble right now in financial assets, the markets, Bitcoin, gold, silver, lumber, housing prices? Are we in a massive bubble? And if so, what does that mean and when will it pop? So we are obviously in a bubble. There is euphoria around the markets. FOMO is actually something that's going to be traded here soon, the FOMO index, just like the volatility index. But there is euphoria surrounding the markets. Capital is still flooding in. So we are dangerously close to a bubble bursting. The Fed is keenly aware of what's going on. They're not seriously concerned about it. They do realize that markets go up, markets go down, and things will come back. But we are definitely in a bubble when it comes to financial assets and cryptocurrencies and things like that. So the question is, when will that bubble burst? And it's all about interest rates. It's all about bond yields, treasury yields. As those yields go up, interest for those other assets will go down. Speculation on the other assets will go down, and people will take profits off the table and pour into other longer term assets that they can bank on and stop the speculation. Wall Street is going to continue to push the bull market as far as they can because that's how they make their money. They make it on fees. They make it on investors putting money to work in the markets. If they were to come out and let everybody know what the real story is that we are facing a bubble and it's going to pop and now is the time to take profits, they would be in a losing situation. They make money as their assets under management go up. They make their money on the profit side. If their investors take cash out of the markets and take their profits, they're making less money and no money at all if they don't have those assets out there working. So you can't listen to the investment banks. They are only following where their fees are leading them. The housing market is definitely in a bubble, but that's all about demand. So as long as demand remains high, rates remain low, housing will continue to hold up and be strong. Prices will continue to rise, but there is a level that it will not go beyond. It's an affordability issue. It's all about payments at certain price points, and people will push back. There are houses in every market that are not selling, and there's houses in every market that are selling in days. So the key is, if you are an investor or if you're looking to buy a house, sell a house, whatever it is, you need to be aware of what is selling where and what is not selling where and why. And that is every market. You will see houses that you can't give away, and you'll see houses that go in days and get snatched up for well over the asking price. So real estate is hyper local. It's all about demand. It's all about interest rates. It's all about affordability and cash flow. Whether you're an investor or a primary occupant, owner occupant, it's all about that payment, that cash flow, and the interest rates. That's what's driving demand. As rates go up, prices come down, demand goes down, and things will level off. Lumber is at an all-time high right now. I've seen this before. We've all seen this before with lumber, with drywall, with insulation. Back in 2008-9 or before 2008-9, when everything was booming, there were allocation because of supply constraints. Insulation was on allocation, drywall was on allocation, steel was on allocation, meaning the manufacturers were only allocating so much to certain vendors in certain areas. Cement was on allocation when China was buying up all the cement, all the steel, all the copper. So we've seen these things before. Prices will go up, prices will come down. It's all cyclical. The key is you have to be patient. You have to make sure that you're on your numbers and that you can withstand the downturn when it comes, because it will come. So be prepared. Nobody knows when the bubble's going to pop, but we are getting very, very close now. A lot of the top experts, a lot of the biggest minds out there, economists as well as investors, are all putting up the caution flag and kind of saying this may be the time to take profits off the table, kind of sit on the sidelines a little bit, let the dust settle, and then jump back in once the market pairs off and gets back to realistic levels. Where are realistic levels? Probably where we were before the pandemic was more realistic of levels of the stock markets and all the other assets. It's all of the quantitative easing and the money that the Fed has pumped into the economy that has created this asset bubble, and it has to deflate at some point. So just keep your eyes out, be careful, and if you can sell and take profits, sell and take profits.